What's going on, guys? Mike here from Capitol Hill FX, and today I'm going to be marking up another chart from scratch for you guys just to get you a good idea of how I'm marking up my charts and how I'm going about doing analysis on a day-to-day basis. So before I get started into the charts, I wanted to just plug my content real quick. If you are a non-profitable trader, a new trader who's struggling to become profitable, please follow my content. I am active on Instagram every single day, posting informational content value for traders that are struggling to become profitable, and just traders in general. Please follow my content, Capitol Hill FX, and I also have a Telegram channel. Link is in the bio, where I'm posting my trades on a day-to-day basis with a detailed analysis, my entry image, my exit image, videos, all this different type of stuff, setups, and all that such, and it's all for free. So please click the link in the bio and please join the Telegram channel today. So let's actually jump into how I'm analyzing my charts on a day-to-day basis. So we're going to start off with Aussie Japanese yen here, and I start off with a top-down analysis, so meaning I start off my analysis on the weekly and daily time frames to gather a general bias of if price is moving downwards or upwards, get the general momentum and movement of the pair, and then I'll sneak down to the 4-hour and hour to establish my key zones. So mainly the major zones are on the 4-hour, mine are on the hour, and then I'll sneak down to the hour and 15-minute for the trade execution. So let's stay on the weekly time frame. First thing I like to do is actually identify any extreme support or resistance levels. So we could see that we have an extreme resistance level right here and an extreme support level right here. And these levels should be psychological values. What I mean by that is they should be round numbers. The reason they should be round numbers is because most banks are using their orders for round numbers, meaning price is most likely going to fluctuate at a round number. So I'm having these psychological values on my chart as well, just to get an advantage. So we could see that we're actually trending within these two extremes. So the next thing I like to do is just analyze the overall price structure on the higher time frames. Are we creating lower highs or lower lows? And we can see that we are actually in a very bearish downtrend. We are creating lower highs and lower lows. So there's no doubt of where the momentum is and what actually price is doing. We are overall in a downtrend. So the next thing I like to categorize are we in an impulse or in a corrective phase? We could see that once we rejected off the top of this resistance level, we shot for an impulse movement followed by a corrective movement, meaning a lower high, then another impulse movement creating another lower low, and now we're currently at a corrective phase where we're at a lower high. This would be a very good opportunity for sell opportunities to capture the next impulse movement. Now I wouldn't just look for the next impulse movement right away. I would look for this bullish correction movement to break bullish structure, meaning break its higher highs and higher lows before looking for sell opportunities, but we'll get there. So for the time being, we know that on the bigger time frames, we are overall bearish. Now, when we sneak down to the daily time frame to actually analyze the recent price action, what I like to do is actually just draw some trend lines just to get a good idea of where price is channeling. Now, when I'm drawing these the trend lines, I actually use my trend lines as zones, not as laser points, and I think this is very important because not many people use trend lines as zones. I use these as zones just like I would support and resistance levels. So I think this is very important because in Forex, like even on the charts, nothing is exact. It's a zone, it's an area. So make sure that you're having your trend lines be zones, because you could have a lot of opportunities like this one right here, where it may look like it's breaking the trend line. Like right here, it looks like it's breaking the trend line, where it just snaps right back in the channel and starts trending again. This would be like a little fake out. So make sure that you're actually creating trend line zones, and if it does break the trend line, it has to fully break through the whole entire zone. And for these trend lines to be valid, they have to have 3 valid touches on the trend line. So make sure that there's at least 3 touches on the trend line so that the trend line is valid. If there are not 3 touches, it is not a valid trend line, so make sure you are doing that as such. So we could see that for the time being that price is channeling upwards. We have this same exact analyze the price structure. We are creating higher highs and higher lows. There's still an impulse and corrective movements. As we could see, we are just ending this corrective movement, it seems, and prices bouncing off the bottom of this trend line, this uptrend channel, and this is a good opportunity for buy opportunity. So with that being said, we're actually going to sneak into the 4-hour, and you could tell that I don't have trend lines and all that mess on my lower time frames. Why don't I? So I don't like to have trend lines on my hourly time frames just because I think that it seems to clutter up my chart. So when I'm analyzing price action on my lower time frames, I actually like to just have like a naked chart, and this is where I'll actually identify some key zones where price may take a turn. So here I could see a key zone right here. There's a key zone right here. And these key zones are very important because this is actually what executes my trade. So I'm a break and retest trader, so meaning I'm waiting for price to break out of this resistance level, come back to retest it, nice rejection wick, meaning a long tail, small body. And then I will actually wait for some bullish rejection before actually placing a long order, probably targeting the previous high with my stop loss right below that rejection wick. So this would be a good setup. This may be like a 1 to 3 risk reward. So for the time being, I'm going to wait for this to set up. This actually seems like something valid, and like I said, I usually use a top-down analysis, starting off with a weekly, going all the way down to even the 15 minutes. So we could see on the daily time frame, we are pretty we are pretty bullish. We are just bouncing off the bottom of this uptrend channel, meaning that this is a good opportunity for buy opportunities. Here would be a good opportunity for sells, but we are not over here. We are just bouncing off the bottom of this uptrend channel, signaling me that price may start going up if it stays with this bullish uptrend. So if price manages to break above this resistance level and come back to retest it as support, I am going to be waiting for some nice rejection and some bullish, maybe a nice bullish wick right after the rejection wick, signaling to me that price is going to shoot to the upside. So I don't want to spend too much time on this. I just want to give you guys a good idea of how I'm marking up my charts and how I'm actually looking at these pairs, just to give you guys a good idea. So until next time, this is Mike from Capitol Hill FX. I'll catch you guys on the next one. Have a good trading week.